VinFast went public as a SPAC very recently, and to the moon it did soar, and it came tumbling back a bit. It's very volatile. We're going to discuss whether a pure electric play is the right one, if they're more than a car company, and who's out there actually moving and shaking. I've got Herbert with me from Brighter. I'm Brian. Welcome to My Tesla Weekend. Herbert, so good to have you on.
Thank you. And I'm Herbert from Brighter with Herbert. I should do my intros like you do.
So VinFast went public via a SPAC, a special acquisition merger, and those are basically, with an IPO, there's a bunch of different rules. You have to have certain longevity, you have to have certain revenue and other things before you can go public. But what if I really want to go public now? I know I'll just merge with a company that already satisfied those requirements, and boom, I'm on the stock market. And when we've seen this happen, Nikola, Lucid, quite a few others, what we get is a lot of volatility, a lot of speculative money flowing in and flowing out. And unfortunately, a lot of retail investors get caught up in it. They think it's the next big thing. And for very short-time speculators, it definitely is. As of this recording, it IPO'd right around $40, $38, spent some time last week over 80, and now it's down at 43. That's the kind of volatility I would expect. They still have a market cap north of $100 billion. So first, let's consider the question, is VinFast more than a car company?
Well, let's first address this question about how to raise money and what's happened. Yeah. So these companies are taking advantage of this hysteria that happened with electric vehicles, hysteria that happened with, for example, LiDAR companies. Anytime some new idea comes in, quick way to raise money is create these SPACs, right? These, try to go IPO as fast as you can. And then you get investors who are just going to throw money in. We've seen now hundreds and hundreds of EV companies and LiDAR companies that have gone under after this kind of race. And the most important thing is, did they create a product that is actually going to be successful, or did they just raise money and then they're struggling? As we know, creating a car is very, very difficult. It's going to take years of investment. So they needed to do this. But, this is a short-term blip. It's clearly, you don't know what this is and what this means and where it's going to head it. So I don't know if this is going to be headed in the right direction. I don't know much about VinFast. Can you tell me a little bit more about their Vietnamese car manufacturer? What do they sell and where do they sell it?
So they are owned by the largest company in Vietnam. The CEO is a billionaire, but a low billionaire, a single-digit billionaire, and he's pumped an awful lot of his own cash in. And my concern with VinFast, when I included them in the Are They Doomed series, and they actually got pretty good marks. The lowest mark they got was for their ability to raise cash, and that has now been addressed. They have raised cash. So this gives them an opportunity to survive. Whether that means they can flourish is, as you said, a whole different matter. They're hoping to have a factory in the U.S., which would allow them to build domestically, get at least a chance at the big EV credits. Without those, I don't think they would stand much of a chance in the U.S. market, as other car companies are finding out. They're selling cars, not a lot. But they are selling cars. They do have some experience building good enough cars to address at least the Vietnamese market, but they're newer to the electric game than they would like to be. But this is a big opportunity for them to actually try and get mainstream, and at least now they have a chance. The reviews of their vehicle have been pretty terrible. There were a lot of people who were paid to do reviews, and maybe not paid cash, though some were, but paid in the form of an all-expenses luxury trip to Vietnam for a week, during which they got about 20 minutes with the car. That will buy you very good coverage. And I've seen a lot of people say, no, this is a world-class car. Sandy Munro said so. Yeah, Sandy Munro didn't tear it apart. He drove it for 10 minutes.
I see. So I see this article, Forbes, and it said here that VinFast broke ground on its first American factory in North Carolina last month. Plans to begin production at the $4 billion facility in 2025. As of June, only 137 of their electric vehicles by VinFast were registered in the U.S. How is it that they're able to sell in the U.S. when I thought that China was, high import taxes and things like that are restricted?
Well, this is not from China. This is from Vietnam. And I don't know that Vietnam has the same import tax that China does. But even if it does, you can lose 28% on 137 cars. That's not going to kill you. They can make that work. Just to find out if the market's actually going to, if they know they're building a factory, it's not a crazy idea to lose a little bit of money to get a foothold in the market while you're building the factory. My concern when they broke ground, because the groundbreaking was more ceremonial than practical. There are no drone flyovers because, as far as I can tell, there is no progress yet. Because at the time of the groundbreaking, they had no cash with which to build a $4 billion factory. Maybe that is now fixed. And again, in the comments on that video, you had people saying, "You think they would?" You don't think that they know they need more cash and have a plan? Yes, but their plan involves a lot of magical thinking, which may or may not come true. So far, it appears to have come true. Whether that translates into a vehicle that can actually work is quite a different matter.
Well,
and they don't
let's have this conversation. Yeah. Which is, so what the conversation is, right? The pure play EVs have the greatest chance, in my opinion, of succeeding. This company, VinFast, is a pure play EV. They're supported by, I saw they're the 23rd richest man on earth. So he's got billions. It's going to require billions. He's found a way to raise money, although I think it's a meme stock. They're saying, I don't know exactly what they mean by that, but just hype. And it's going to fall. And this alone, the fall, the rise and the fall could kill them, just that alone. But if they can have enough money to build a factory. Now, you told me that the car that they made is not, it's not getting tremendous reviews. But I still contend that they have a higher chance of success than these ICE car manufacturers that are struggling. One of the stats that I've been repeating, and I've been researching where I found this, but I'm pretty sure that this is real, is that the Chinese car manufacturers, when they first initially started selling electric vehicles in China, it was the ICE brands, the gas car companies that were creating an EV brands trying to sell it. What they quickly discovered was that the consumer in China was less likely to buy an electric vehicle car from an ICE car brand because they weren't buying into the new technology, that this is a new tech company. And so what they ended up doing was they spun off pure electric vehicle brands. And those pure electric vehicle brands is what became very successful in China. And so in my mind, it's going to be the Rivians, the Lucids, although, of course, it's very difficult. A Lucid may not succeed. It's those kind of brands, the VinFast, that has a higher chance than, let's say, Ford or GM, because they're struggling with dealerships. They're struggling with the unions, as we know, that's coming up in September. They're struggling with just cannibalization of their existing business where they're making money and one that they're not. And, the question is, would you buy a EV from these brands? Now, I've heard the opposite, which is people are telling me, no, in the US, you have a very strong brand, GM, Ford. These are powerful brands, and they are releasing electric vehicles, and it's being well received. Or we haven't seen the major sales yet, but there's no pushback saying, I'm not going to buy a EV from Ford. It seems to have just kind of gone along. So where do you stand in that argument?
Like you, I can see both sides. China is a different market. It is a different culture, and I could see them having different ideas about that. We know that in Europe, China has had, at least so far, some success just buying defunct British brands like MG and electrifying it. The buyers know this isn't really MG. They know it's something new and different, but it still has that hint of familiarity with the brand name. So I think in those cases, you can get the best of both worlds. Ford famously has made the decision to, at least on paper, start separating their EV business from their ICE business. And this, I think, would allow them to have the best of both worlds, allow them to have Ford buyers who love the brand, but also be able to reach out to people who want a pure electric play. One advantage I see with the pure electric play is everyone in that space knows it's do or die. We don't have a plan B. We don't have ICE sales to subsidize our losses. And when you said that the legacy guys don't want to cannibalize their ICE sales with their EV sales, that goes both ways. They can't subsidize. They can afford to subsidize. If Ford didn't make billions off the F-150, there probably wouldn't be a Lightning. They couldn't afford that program without it. And if the question then becomes, if Ford spun off their EV division and did a public fundraise, would it raise money? And I think the answer is yes. What do you think?
Yeah, I think that it's less actually, when I think about it, less about the brand and the consumer perspective. It's a lot more about the business model, right? If you're a pure play EV, you have a much higher chance of succeeding. You're focused, you have, everything's just focused on trying to get this perfect car. And if you got the ICE car, I don't actually know of any other industry where the legacy technology rolled out a brand new tech and succeeded. There's been a couple very close ones. Like I know Kodak actually developed a digital camera.
Famously.
But again, it was their executives that couldn't do it, but they could have made that transition. Same thing with Blockbuster, by the way. Blockbuster rolled out a DVD by mail that was better than Netflix. In fact, Netflix was so afraid they went and visited them, and they were going to be bought by Blockbuster.
For like $12 million.
The only reason why Blockbuster failed was not because of the DVD by mail business, which was succeeding. What they failed is because their loans for the retail real estate just blew up on them, and their debt was too high. In the same way, we might see that with these ICE manufacturers. Their debt becomes unwieldy if they continue to lose money as they invest in the new technology. So I'm not saying that it's impossible, but it's much harder, right? Much harder.
If you look at some of the biggest companies, look at Apple. They are not afraid to disrupt themselves. How many products have they released that disrupted their biggest moneymaker from 2 years ago? The iPhone killed the iPod. The tablet killed the iPad. Killed the MacBook. Mostly, everything they did stood to disrupt what they already had. But their philosophy was, if we don't do it, someone's going to do it to us. At least we can control our destiny. And for that matter, digital sales have replaced physical sales in so many instances. Weird Al last year, the year before, had his first #1 record. And in order to get that, he needed to sell, I think it was something like 15,000 physical copies. That's all it took, because nobody buys physical copies anymore. And they do account for some percentage of digital sales as well. But to get a #1 record with so few sales just goes to show how much times have changed. Now with brand new stocks like this, like VinFast that just came out, will you be surprised if tomorrow it goes up or down by 50%?
Obviously, like I said, I think at this point it's all speculation at this point, and so they were just buying it because it's a new stock. It's just traders mostly, is my guess, not real investors at this point. They need to show a better car. They need to show progress with factories. They need to show sales, whatever.
At the end of the day, it's all execution. In my Are They Doomed series, I get people saying, well, yes, but look at how the stock has done since then. And I say the stock over a given window doesn't matter. I can show you how much Tesla stock is up if I grab the right snapshot, and you can show me how much it's down using a different one. The only thing that matters over the long term is, are you moving in the right direction? Are you selling the products that you're intending to sell? And in Tesla's case, do you have a sufficient breadth of products to justify your market cap? If VinFast, there's no reason VinFast couldn't get into stationary storage and do it well. Anyone who makes battery electric vehicles should be able to do that. But we haven't seen any moves in that direction. Lucid at one point had talked about stationary storage. Their retail investors still believe it's just around the corner, even though the company has said it isn't. VinFast is not designing their own chips. They're not designing their own autonomy. Right now, they are just a car company. Until I see something that shows me they are more than a car company, their highest aspiration should not be in excess of another small car company.
Yeah, it's. I was going to ask you, do you think that VinFast has the potential to be bought by other car companies that want to get into the game or maybe even get into the U.S. market, but then kind of bites them in the butt, right? Being the third most valued car company in the world, which is so clearly not real, laughable. They're going to fall. They're going to fall, but
they're going to. And that's a problem you get with a lot of these. They say, well, Lucid, has a real cash problem, but they have some good tech. Maybe they'll be bought for that. I said, well, their market cap's still $20 billion, and the tech is not worth $20 billion. So no, the best they would have in that regard is to merge with somebody else who is similarly grossly overvalued, so that the two wrongs make a right. I don't know, but
exactly.
Yeah. All right. Well, what did we miss? What did we misunderstand? What are we overlooking about VinFast or Lucid or Nikola or any of them or Rivian? I like Rivian. I see them more and more every day. And I am hopeful for all these companies. Just because we're Tesla fans doesn't mean we're rooting for the failure of everyone else. I'm sure those people exist, but I don't hang out with them. So let us know in the comments. Make us brighter with Herbert. And for everyone else, subscribe, like, do the usual things, and stay tuned, stay juicy, and I can't wait to hear from you clever robots next time we get a chance to hang out.